These 5 lies are responsible for more blown accounts than most traders realize. If you ever traded stocks, you for sure have been fed with one of these lies. And even believing one of them could be the reason that your money keeps on disappearing. Stick around until the end, because number 5 will completely change the way you trade. Lie number 1. You can predict the market with enough tools. It sounds amazing in theory. Pile on enough indicators, analyze every trend line, and surely you'll crack the code. But here's a hard truth. The market does not care about your tools. The markets are driven by a web of unpredictable factors. Global events, economic reports, politics, and just human emotion. No chart, no algorithm can account for all of them. Think about it. An unexpected tweet, and the market could swing in ways that no single indicator could ever predict. Trying to predict the market is a bit like guessing when exactly your Amazon package will show up. You might be close sometimes, but mostly you're just guessing and hoping for the best. The key difference between an amateur trader and a professional trader is this. Amateurs, they obsess about the best predictors, while the pros focus on preparation. The best traders, they don't rely on knowing where the market will go. They focus on managing risk and putting themselves in situations where the probabilities are in their favor. Preparation means having a plan, knowing where you enter a trade, where you exit if it goes wrong, and where you'll take the profits. It's all about removing the emotion and sticking to the logic. Trading is not about certainty. It is about stacking the odds in your favor and managing the inevitable uncertainty. As the saying goes, it is not about predicting the future, but being prepared for it. In trading, that is the only thing you can control. Lie number 2. You can make the most money in day trading. Day trading is often marketed as the ultimate way to make it in the stock market. Movies, social media, they all glamorize it, with traders being glued to 6 screens, making rapid fire trades and walking away with bags of money. It is an exciting image, but the truth is, for most people, day trading is not the path to wealth. It is a fast track to stress, losses, and frustration. First, there are the fees. Day traders often make dozens of trades in a single day, and every single one of them comes with a cost. Brokerage fees, spreads, slippage, these small, often overlooked costs, they add up quickly, eating in your profits before you even realize it. Imagine making a series of just winning trades only to discover that the fees have eaten a big chunk of your profits. And then there is the emotional toll. Day trading requires constant focus and discipline. Every decision needs to be precise. There is no room for hesitation, no room for second guessing. Just one impulsive move can take away weeks of profits. The pressure of making split-second decisions combined with the roller coaster of emotions leads to burnout of many new traders. Does that mean that day trading is impossible? Absolutely not. It is just not what most people think it is. Successful day traders have spent years fine-tuning their craft, and for them it is a full-time job and not a get-rich-quick scheme. So if your goal is to build wealth, consider alternatives like swing trading or long-term investing. Swing trading allows to hold your positions for days or weeks, giving you the time to analyze data without the pressure of constant decision making. Trading is not how fast can you make money. How smart are you with your capital and your strategy. The slower path does not sound so exciting. In the end, that is the best chance to give you lasting success. Lie number 3, the more you trade, the more you earn. One of the biggest misconceptions in trading is the idea the more trades you do, the more money you will earn. It sounds logical. More trades means more opportunities to profit, right? But the truth is, the real money in trading is not in the buying or selling. It's made in the sitting. Jesse Livermore, one of the greatest traders of all time, said, "It was never my thinking that made big money for me. It was always my sitting tight." Jim Rogers, another legendary investor, he said, "I just wait until I see money sitting right in a corner, and all I need to do is just go over there and grab it, and I do nothing in the meantime." Over trading, jumping into the market constantly, is one of the fastest way to drain your account. Every trade comes with a cost. Brokerage fees, spread slippage. These small but steady expenses eat your profits over time. And then there is a psychological toll. Impulsive decisions by the need to be always in the market often lead to poorly thought out trades and unnecessary losses. Successful traders understand that less is more. They don't feel the need to constantly click buy, sell. Instead, they wait for high probability setups, those moments when the odds are clearly in their favor. Trading is about discipline and precision, not activity. Patience is one of the hardest skills to master for new traders. It feels counterintuitive to do nothing, especially when the market is moving, but waiting is often the smartest thing you can do. Sitting on the sidelines, watching and preparing for the right opportunity can make all the difference. Trading is like hunting. The tiger that chases after every movement in the grass, it wastes its energy and goes hungry. But the tiger that waits, staying focused and conserving its strengths for the perfect moment, is the one that eats. Lie number 4, following market gurus guarantees your success. Here's a myth that gets a lot of beginners hooked. The idea that all the market gurus have the answers. You have seen them. Flashy traders on social media showing off their cars, their vacation homes, and their so-called guaranteed strategies. They say, just follow my trades, you'll be rich. But here's the truth. Copying somebody else's strategy, it's like trying to use somebody else's prescription glasses. They might work perfectly for them, but for you, it will probably just give you a headache. The problem is that trading is not a one-size-fits-all strategy. A strategy that works perfectly on a $500,000 accounts might do terrible things on a $500 account. And then let's not forget about the so-called gurus that just make the most of their money by selling courses. But blindly following somebody else's trades can lead to disaster for another reason. You are not learning the why behind the decisions. Maybe that guru knows perfectly when to get out of a particular trade, but you don't. And by the time you figure it out, you're already losing money. Successful trading isn't about following somebody else their moves. It's about understanding the principles behind them. Learn how to analyze a market, manage your risk, and develop your own strategy that fits with your goals in your situation. As the saying goes, give a person a fish and he will eat for a day. Teach a person how to fish and he will eat for a lifetime. The same applies to trading. Learning how to trade for yourself is the only way to achieve long-term success in trading. So instead of chasing after gurus, focus on building a foundation of knowledge. Study, practice, and most importantly, understand why certain trades work and others don't. That's how you create a system that will work for you, not just someone else trying to sell their dream. And now lie number 5. Here's a myth that traps a lot of traders. The belief that the more complex your strategy, the better your results will be. People pile on indicators, create a list of endless rules and give them system dramatic names. It might sound impressive, but the truth is, complexity does not equal profitability. Overly complex strategies can become your worst enemy. They are harder to execute, more difficult to adapt, and often lead to overthinking. Imagine being in the middle of a fast-moving market and trying to analyze 5 different indicators, all giving you conflicting signals. By the time you figure it out, the opportunity is already past. The best traders know that simplicity wins. A straightforward, well-tested strategy is easier to follow, stick to, especially when a market gets chaotic. Simpler strategies allows you to focus on what matters, executing with discipline and managing your risk effectively. Even professional traders, with all their fancy tools and equipment, often rely on basic indicators like moving averages and price action. Because trading is not about impressing someone with your fancy system. It's about getting results. Albert Einstein once said, "Make everything as simple as possible, but not simpler." The same applies to trading. A system that is simple and effective will always win from a complicated mess. Focus on clarity, execution, and discipline. Strip away the noise and concentrate on the elements that truly impact your trading. In the end, simplicity isn't just easier, it is smarter. If you agree with these 5 lies, please hit the like button, and if you disagree, subscribe so I know where you stand. If you have what it takes to become a trading millionaire, check out this video right here. Click on it.